Oh my goodness, it's already 11 a.m. Enrique,
How are you, sir?
Owen, so good to see you after your globe trotting there.
Yeah, exactly. My Eastern European tour. So
Well, welcome back. Welcome back to Top Trades Live. I'm glad you can be here. I know we have a lot to talk about today. You gave me a short list of things, and I've been adding
yeah.
here this morning. Um, we
and
want
when Greg says short list, everyone, Greg was like, "Do you have anything to talk about?" And I sent him a list of like 17 things. It's been
I
2 weeks, so yeah,
shouldn't have said, "Do you have anything to talk about?" I should have said, "What do you want to talk
yeah,
about?"
yeah,
That was a lot of
exactly.
fun. But I know you want to talk about China, energy, nukes, inflation, some things I want to talk about too, the return of the tech trade, semiconductors. You wanted to talk about buying pullbacks, election shenanigans too, Trump, that sort of thing. What about precious metals, silver, small cap strength, lotto season? I think we're entering lotto season here. I know you mentioned that, and how we can uh, play some of the stronger rallies responsibly in this market right here as we sort of trickle into these big melt up rallies. Where would you like to start though? I mean, you've been out of town, so I'm going to let you take the reins here and let's kick us off.
Yeah, look, I mean, I had a buddy who posted a note this morning that a technical analyst who said, a strong market, positive breadth, stretched sentiment. And that's really where I think we're at. When you look at any number of breadth indicators, and just so everyone understands, breadth means how many of the stocks that are out there are moving one direction or the other. So in the S&P 500, if 400 of the stocks in the S&P 500 are at 52-week highs, that's a very broad, strong move. All year, we've actually seen a number of what are called breadth thrusts. That's when you see like breakouts happen. Those are very, very powerful signals. And the difference since July in the stock market is in the beginning of the year, we were seeing breadth thrust. That's a tongue twister, but we weren't seeing a lot of breadth in the market. Whoa, Nelly, that's reversed. Tech is actually doing just fine now, but banks, I don't know if you've seen these bank earnings like Bank of America, JP Morgan, Goldman Sachs, everyone's crushing earnings. The insurance companies have been beating numbers. And so now what we've seen very broad breadth in the market. Pretty much everything except energy is doing good to great. That's a very, very powerful sign, and it means we're in the heart of a bull market. The only but that I have in there is that very similar to what we saw in July, although not quite there yet, we're beginning to see sentiment move higher. I've in this recent market, the CNN Fear and Greed Index has worked pretty well, and we just touched over into the full-on greed piece. So, I guess most of our message this last month has been remain tactical, but remain aggressive. And I really see that in the market. And as much as we see sentiment in some of the sentiment indicators moving higher, it still feels like like people kind of dislike the market. Like, if you while we've got the CNN fear and greed indicators higher, you've got the AAI investors intelligence numbers, very much in the middle and things like that. So look, it's just a good steady market. And I guess I'll leave with this one last thing. The election, I think, is a lot of non-news in this market. It's the thing everyone goes to is, oh, the election's going to upset the market. I kind of don't think it does. Like, and I've actually said this in recent top trades, is I think that whatever's going to happen is going to happen. We may not know for a day to a week afterwards. But I don't think it's going to upset the market. It's about earnings now, and look at what earnings have done, especially out of financials. They've been real good, and I think tech earnings are going to be good again. Everything except energy is looking real good, and that's a pretty positive place to be in the market. So it continues to be a constructive environment, and pick your spots.
Yeah, definitely. And I know you weren't here last week, but Matt and I were talking about the same thing in regards to the election, where it feels like, and I don't know if you and I talked about this specifically, but the market seems okay with whatever the outcome might be in this election. I know we talked about Harris moving, or at least her rhetoric moving much more to the center, as as most national uh, politicians do when it comes time for a general election like this. And the market seems to be okay with either her winning or with Trump running away with it, or whatever seems to happen. Or even, like you said, a little bit of indecision. Maybe we have a week or two before we know who the winner is. But no matter what happens, if polls come out and they're a little skewed one way or the other, the market doesn't seem to be reacting one way or the other. So
Look, I think that I call this the party favor election, right? Both candidates seem to every week get up there and say, okay, what do y'all want? What's constituency wants what? And I'm just going to give it to you. Now I'll go down a Jim Rickards road. This probably ends really effing badly, a year, 2, 3, whatever down the line. But right now, every candidate seems to be like just giving away support wherever they can find it. And so I think the market's properly assessing that. Like the market's saying, oh, they're for Bitcoin and they're for, they're for some tax cuts and they're for this industry and they're for that industry. The one thing that I have thought was interesting, and I wrote about it a little bit, just because I saw last week, DJT, Donald Trump Media and Technology Group, which is DMTG, which is Truth Social, the stocks friggin' doubled. By the way, yesterday it was up 16%. Today, I mean, let me see on my what's it doing today? Today it's up 8%.
Yeah,
and so like I feel like we've got like a real time. If you've seen the polls too, the polls have been moving in Trump's direction. I feel like we've got a whatchamacallit, a real-time indicator of what's happening in the polls with the Donald Trump media stock. And by the way, I see someone saying here my sound's not so good. I can play around with it if you want to.
I think you're sounding really good. I don't know. Maybe that's on someone else's end, but I'm hearing you loud and clear.
Yeah, I see on the chat here, because I have it open, that they're saying it's hard to listen to. And is it both everyone? It says mine's going in and out.
Oh, I'm not catching that at all. I hope mine's not either. But I mean, you sound good to me.
Got it. Well, here's what I'm going to do though, Greg, because it seems like it's pretty bad. I'm going to log in and out real quick, and maybe you take the ball, and I'll be right back.
Okay, sure thing. Go ahead.
Okay, cool.
All right, guys. Sorry about the sound issues. Enrique's going to log right back on. We're seeing a little bit of a dip in the market right now. I know that things were looking pretty bullish up until about 10 a.m., and then it felt like the bottom dropped out of it. Again, not a real big deal here with this intraday action. It did feel like stocks were really starting to teeter on the edge of a cliff right there, and we're seeing the semis retreat. I think this is in reaction to ASML. ASML put out revised guidance lowered guidance for 2025, and they took a big hit. And I feel like the semis are all moving in tandem with this. It's down like 13% now. So a little bit of spooky action in the semis. I'm not really that concerned about it, because over the past week or so, the semiconductor index has really started to firm up. And yeah, we got an ugly candle here due to that ASML announcement right there. But if we look beyond this at NVIDIA, it feels like this has already broken out, and maybe this is a really nice gift that we're getting right here. This little 5% drop in NVIDIA. I mean, that was a pretty powerful breakout, if you ask me. What happened last Tuesday, we were on the call talking about this in real time, me and Matt. NVIDIA has been coiling really nicely over the past few months, ever since its summer peaks right here. You can see these tags of this little triangle that I drew right here, and then the breakout on Monday right here, then the extension into Tuesday. This right here to me feels like a gift, and we could maybe bounce around here in the 130 to 140 range before it really tries hard to push to that 140 all-time high right there and push higher. It feels almost inevitable to me that this is going to go, again at some point. Like Enrique was saying, like I think everybody's kind of prepped for a pretty strong earnings season, and barring some sort of big negative surprises, I feel like the semis and the Mag 7s, most of them look really good right here. They really want to start to run. I feel like they're going to be, back in the saddle for a nice melt up into January. especially I think Apple. This Apple chart looks just beautiful right here. Maybe it needs to dance around a little bit in the 230s before it really blasts off. But I mean, just really nice series of higher lows here leading up to this move over the past couple of days. One of the strongest mega caps out there. I mean, what's not to love about some of these charts? Rick, are you with us again? How's the sound?
How's the sound? Test one, test two.
You sounded great to me earlier, so I don't see any problem with it.
Yeah. So we'll see. It sounds like some people were refreshing. Well, let me go ahead and we'll see how it says sound is broken still. It's because I tested this just 10 minutes before we got on here. So, but let me
ask Ian real quick, because he's on the other end, and it seems like we're having some sort of connection issues. I don't know if it's the internet here or what's happening. So just hold on 1 second.
Yeah. Okay. It looks like some people think it sounds good. So I think it might just be if people refresh their YouTube.
I'm going to try to plug in here to make sure the connection's okay. It's behind the chair. If you just want to hand me the plug. I'm going to try to go to hardwire here if we're having some issues. You sound good to me, so hopefully this is carrying over, but I'm going to go into internet.
Where I get my cameo.
Oh, no.
Yeah.
There he is. Gotta go. I'm out of here. You guys are doing good, though. Let's get this chop fixed.
All right. Okay. This is our most chaotic episode of all time. I like this. Go on.
Yeah. So what I was going to say, and I think you guys talk, I'll say two things about Mag 7 and then also a little bit more about technology. The Mag 7 all look good. Like the only one I'm really concerned about, frankly, is Tesla, because I think the Tesla had a big run, and I think the numbers are going to continue to suck. But every single other one of the Mag 7 has been reporting good to great numbers. I think that Goog is going to have very good numbers, and the stocks really pulled back. I think that one's particularly attractive. But if you look at all the setups other than Tesla, which arguably shouldn't be in the Mag 7, I call it the Sexy Six, is probably the better grouping. They look really strong. And so, again, if financials are breaking out, have you seen the transports? Transports are hitting new highs, all of this. And then I think you guys might have spoke about it last week, but lo and behold, take a look at software. Like, software got absolutely destroyed in the first half. Like I felt whenever a software company was going to report, it was going to be down 15 to 30% that day. It was literally like opening up hand grenades on reporting day. And now you're breaking out. So, I don't want to say that there's nothing to be worried about. And I think we could see a sharp pullback. I mean, look at what NVIDIA is doing today, down 3%. But it's very constructive. Breadth is great. Just sentiment's a little overextended.
Yeah, absolutely. And I mean, you can feel it too. If you go down the cap scale and you look at some of these smaller, I don't want to say garbage stocks, but some of the junkier, runners from the pandemic trading days that are all starting to catch and move higher right here. We're seeing big double-digit spikes in these stocks almost every single day. It feels like really getting into the period where people are starting to jump back into names like that. And those have been dead money walking for so long. So while that's good to see, it does indicate to me too that a little bit of volatility might cure some of the froth that we're seeing in this market right now. We're going to get a few sharp pullbacks here and there. Nothing wrong with that. I think overall that's going to be healthy, setting us up for November, December.
Yeah, and even when we have the pullbacks, I mean, I have a screen here with a lot of ideas that we've recommended in the recent past, and it's a very eclectic group. And in it, there's in the long-term investing area, there's a lot of quirky small and mid caps. What I've seen is the market, the indices pull back. The S&P 20, 30, 60 basis points, and you'll see NVIDIA like it is today down 4% or something like that.
Yeah.
But then these weird little stocks are just doing fine. They're having big up days. So it's, this is what bulls do. They have strong breadth. They rotate through the different groups. And, I think the key, I'll give a couple keys to trading this, and maybe we can then go into some stocks, is I'll say two things. Number one, I think this is an excellent market to be able to buy pullbacks into strength, because things will come back very quickly. And number two, and I wrote you a note earlier this morning to publish later today, that, I think this is a period where you can be, for a portion of your portfolio, extra aggressive. Like you can go out and, just take 10% of your portfolio and take some shots where you can make on options strategies, or apparently DJT, 100, 200, 300% on your money.
Yeah, definitely. Some things that I'm seeing right now too are some of the themes from the summer that are creeping back, like small caps. I mean, we have small caps outperforming today. If you look at IWM right here, feels like breakout imminent. We have 3 really strong days higher right here. Maybe it needs to mill around in the low 220s before really taking this out, but maybe finally we're going to see some extension off of that super powerful breakout from July that got all mixed up with the yen panic and everything else that shot it right back down to the starting line. I mean, it feels like this is going to be, a potential leader going into December. And I know over the summer we talked about how, a big powerful breakout like that, statistically, it's probably going to lead to a much higher IWM 6-12 months down the line. It's just a matter of time. And now that we've shaken off some of this dust, I think it's ready to go.
Well, and this is what we're seeing in those stocks that I just mentioned. And I know we're jumping around a bit here. I apologize for the sound today, guys. I actually think it's a Zoom issue because we've been testing everything here.
We've been going back and forth.
Yeah. When you look at the IWM or the Russell, it had that big thrust breakout and it got very overextended. That was I want to say it was like an 8 standard deviation move, meaning I think I did the math. It was like a 1 in 44 million move in the Russell 2000. I'll tell you something about a move like that. Number one, the chances that it was going to consolidate off of a 1 in 44 million upward breakout were about 100%, in my opinion. And number two, whether it was because of the yen trade and the markets, there was going to be some reason they were going to come up with. But number two, it's very bullish going forward. And where we are, we talk about China, and I apologize about jumping around. Look at the FXI, which is the China ETF. The FXI is just had the same breakout. I think the FXI is where the Russell was during that period. You had this crazy breakout that happened. It was going to consolidate, but now I think you're going to see a period. And by the way, consolidation could take this back to 28, could take it back to 26. That's what happened with the IWM. But it's very bullish when we look out 6, 12 months, maybe even just 3 months. But you need to let it settle in a little bit.
Yeah, nothing wrong with that. I mean, China's been absolutely crazy. That was a huge thrust higher with all those gaps. I think that's Ian and I were talking about this. I think China just likes to throw big gaps at us. That's its big thing. So we get all these big gaps, and then NFXI today with them pulling back on stimulus away from the market and more toward property owners and that sort of thing. I kind of wonder, in the absence of bigger stimulus, I wonder if China really can power higher from here and show a sustained change in trend, or if this is just going to be just more junk out of there. How do you see this unfolding?
Yeah, I think that they're going to do more stimulus. Like I think that they made powerful statements, and I think the only thing they're doing is the way you jawbone a market is you come out, say you're going to do something huge. The market flew. This thing was up 35% in a few days. And then you kind of say, okay, we're going to do it, but we're going to take our time. So I think you see that stimulus come in there. But part of me, I look at, I follow the technicals a little bit. I let the stocks tell me. That's what DJT stock is telling me, that Trump's going to win right now. Now that may end up being wrong, but I'm a big believer in, and you've heard me say this, price equals truth, is like, all I know is that when I watch technical patterns through time, they are, if you find the right ones, they're high probability bets. The why it eventually did what we thought it was going to do, I can never figure out. Like it can be any number of things. But I think off this long base with China, very negative sentiment, the Chinese government coming out and firing away. I think it's whether again this ends badly or not. That could be the theme, right, of everything that's happening right now. everything's great right now. It's a party. Everyone's putting all the politicians are just like writing the checks. It probably ends bad or definitely ends badly. But I think right now it's okay. And one other thing I wrote about DJT is that the in 2021 we saw like 100 stocks doing this. Right now, we only see a couple. Like it's not as many. So I actually think it's more bullish. This feels like, mid 2020, late 2020, where you were about to go into that extended run. And with the seasonals coming on board, I think it's very powerful. I think it's very powerful.
Yeah, I mean, everything that's popping on my scans right now, that's a big mover. It's on the smaller side, smaller forgotten tech names, big bases. We just got in on a trade on SoundHound today off this huge breakout here. I mean, these are the names that I don't want to own necessarily in the longer term, but that I love to trade these fast breakouts because they can just, compound on themselves, and you can get these moves where they're up 25% in a week, and you can just take profits and move on to the next one. And like you said, it feels like we're getting into the season where we're going to see a lot more of these start to pop up as traders rotate into different names.
Well, and SoundHound, I mean, you've got 25% of the float is short. Because I was looking at that chart, and there was something that said to me it was going to have a big short interest. So that's like that's how you get this move, and I call this an echo move. I don't know anything about this company. I literally don't know a damn thing. But when you see the stock go from 2 to 10 back in February, inevitably I feel, there's the potential for an echo move. So I like this trade a lot. And with that short interest, you could have this thing at $8, $9, $10 in a nanosecond.
Yeah, and we don't even need it to go that high. I mean, I would take 6 and change, and we would be in a great position with calls on something like this. It's got super liquid options, so it was very easy to trade. But yeah, like moves like this, like you said, these echo booms, like we don't need it to go from, like it did here, from $1.70 all the way up to $9.50 to make money on this type of play right here. And like I said, I'm in Enrique's boat where I'm not very interested in the fundamentals of this company right now. I'm interested in the momentum, and the short interest, that's just rocket fuel for a trade like this. If we're in the right season, and if we know the market environment, and we know that these type of plays are popping off, this is where we want to, be directing that trading capital.
Yeah, absolutely. So maybe I'd love to let's go through a couple stocks.
Yeah.
I wanted to highlight, what I was saying about buying into a pullback. And look, this isn't the make you a crazy amount of money, but it is the very high probability bet, which if you do the position right is a great trade. Take a look at Novo Nordisk. NVO is the ticker. This is the kind of trade that we love to do, where you have a company. This is the leader and one of the leaders in the GLP-1 drugs. They were the leader there before Lilly. The company's been absolutely still crushing numbers, very positive earnings revisions. But if you take that chart back and you take it back to the end of June, this thing just felt like it would never go down again. And the sentiment, it was so stretched from the 50-day. But what happens is with stocks like this, these incredible market leaders, and this happened a little bit with NVIDIA, to be honest, is you get to this like maximum sentiment where everyone agrees about it. And I always use this analogy of a boat, a raft on the river. And, you're going through a canyon, and one side of the boat's sunny and one side of the boat's shady. As you keep on going down the river, more and more people get on the side that's sunny. And then what happens is the boat becomes very unstable because there's too many people on one side of the boat. That's what happens with these great momentum stocks. And so I feel like, a high quality company like Novo, and look, this stock's at 117. I think it could go back to 130, 140. That's a nice 20-30% move, especially if you put the options right. But it's also like, I think that when people talk about market volatility, if the market gets crushed, Novo's going to do great. Like, I mean, this is not like, take SoundHound and Novo are almost like a perfect barbell opportunity, speculative breakout, plus buy the dip in the uptrend in an absolute just awesome market leader. And that's actually what I think people should be doing right now is be aggressive around these two types of trades. Size them right. I would size Novo in a different size, bigger than I would Soundhound. That doesn't mean it's the better trade. It's got the risk reward is a little bit different to the downside. But I think if you can find these setups here, be aggressive either with the stock or with options is another way to do it, both with puts and calls.
I like this setup a lot. And like you said, I mean, I don't think people are wrong when they're super bulled up on a stock like this. But again, the market needs to flush out that excessive bullish sentiment. People are, I mean, we give the herd a hard time, but the herd is absolutely right to be bullish about this stock and about these Ozempic names, especially Novo Nordisk. I have a question for you about playing something like this around earnings. How do you view it with earnings coming up in early November? Is that something that deters you from trading, or would you want to step in front of earnings on a play like this because it's a more stable stock?
Look, it depends on the company. This company has pretty good visibility, has had a history. Well, I'm going to say two things. Number one, tell me the company, because I think that will define a little bit how I feel about earnings. But number two, tell me the price. So, here's what I would say. If this stock were much higher, we're at those highs, very extended, I'd be real cautious going into earnings. But we're the opposite. This thing, this thing just hit our RSI trigger the other day. So it traded below 30 and then back above it. You don't get Novo Nordisk when it's not missing numbers and in a positive cycle trading below 30. I mean, you do, obviously it just happened. Right. So I feel like that balance of earnings always has to do about expectations and price. So if I've got a stock that's traded down a lot into earnings, I feel a lot better about buying it into earnings because I'm less, concerned. I mean, and like I said, take a look at Nvidia, how it's done on recent earnings, blowout numbers, and the stock trades down. Take a look at Lulu. This is a crazy name, like just left for dead.
Yeah.
And look what that's beginning to do here. That's crawling back. And this is a company that's actually reported poor earnings. And on the last earnings number reported a disappointment, but didn't disappoint by as much as people thought. And the stock traded higher. So the question to me is just always what's it done going into the earnings and where are expectations? I like Novo here a lot. I think it's, and look, we could still be wrong. An 80% hit rates means you lose 20% of the time, or 1 out of every 5. But with things like Novo, I think you've got a really nice setup where the loss isn't very, very big. And I want to get back to this. I guess this is kind of what I'm saying. We are in a rising tide lifts all boats kind of market. And that's why Soundhound and Novo are a great barbell, because you can take your shots on this thing that can go from 5 to 8 in a hot minute, and you can take your shot buying these leading companies. Google would be another one that I would put into this list with Novo Nordisk, and that's an even easier one where they've been blowing away numbers. They're crushing it, and here the stock is off 20%, 15% off its highs. I think both of those you can do some nice levered up trades and take advantage of it.
Yeah, and right there at that polarity zone too, with that, I wouldn't call it really, maybe it's a little bit of an inverse head and shoulders. I don't really like to get too in the weeds with funny chart names, but I mean, something like this. And I like your thinking when you're going into these, saying like this, when this stock is already corrected so much off its highs, the chances that it's going to be down 7-8% on earnings are much lower than a chance it's going to be up 7 or 8% on earnings from there. I think that's how I'm picturing it in my mind about how I would manage that type of risk.
And we had a real-time question, by the way, from Patrick on Novo Nordisk about where do I get my 80%. I get it from looking at the RSI when the stock's traded below the and it isn't 80%. It's about 72, 73. That when this stock is traded below a 30 RSI and traded back above it in the last few years, it's then proceeded to go up, more than 70% of the time. That's what I'm very data driven. Actually, and this is even better. If you go back I'm running the data as we speak. So this is real time analysis here, folks. if you look at Novo Nordisk in the last 5 years, okay, when it's been crushing it, they have only traded below a 30 RSI 5 times, which is pretty rare. That's about once a year. In 10 days, it was up 80% of the time. In 30 days, it was up 80% of the time, 4 out of 5. And in 90 days, it was up from when it went below 30 and came back above 100% of the time. Your average return in 90 days was 22%. So this is like blackjack, guys. Like, you know, if I'm sitting on a whatever whatchamacallit, a face card against a dealer 4, you know, it doesn't mean I'm going to win, but I got pretty good odds, and you want to press your bets. This is a time where you can press your bets appropriately. I want to be careful here. I think it's a time to be aggressive, but you can't, you don't want to get too far out over your skis. But that's the answer to you, Patrick.
That's fair. And I added RSI to this chart as you were talking about, and you can see, you know, as Enrique was saying, like, here's another instance right here where it was dipping into below 30 in RSI. That was back in August of 22 was the last time it actually did that. So, I mean, a rare occurrence, and in an uptrend, that's the main key too, right? We're talking about a stock in a structural uptrend that becomes extremely oversold, giving you that type of high probability opportunity. All right.
Exactly.
All right. Next up, Bitcoin. I don't know if you ever heard of it. It's a cryptocurrency. It attempted to break out earlier this morning. It was up like $2,000. It hit a high of almost 68,000. So it was up at prices we haven't seen since late July. It's settled in a little bit more right here. I feel like, along with our melt up theme, that crypto is going to pop and we're going to be off to the races. I bet you it'll, if I had to guess, because Bitcoin loves to tease us, it'll go up and it'll test 70, 72, and then it'll give us a sharp drop out of nowhere somewhere. And then it'll pick things back up and start ripping. And then we'll see 80, 90, maybe in a matter of a few weeks.
I'm going to go on record. I think Bitcoin can hit 100,000 by year end. And I think if it hits 100,000, it's going to do it in 8 days. Like, it's just going to, I think you get through the election, and, you know, it's the party favor election. Kamala's for Bitcoin, Trump's for Bitcoin. They're all for Bitcoin. Yeah. And you're going to get through that. And I think it's a coiled spring, to be honest. Yeah. And when it moves, like after this move, like it's kind of this, it's funny, is I kind of feel like if it trades to 75, it trades to 100. If it trades to 70, it probably trades back to 55.
Why not, right?
That's, you want to see the big breakout, but I think you can see. And look, that's by, I'm being a little tongue in cheek by your end, although I honestly believe it's sure, very, very possible. But I think it's inevitable, is also what I would say with Bitcoin. I think Bitcoin 100,000 is inevitable. Inevitable. I probably think Bitcoin 250,000 is inevitable too, but let's start with 100,000. And I think we see it, you know, in the next 3 to 6 months.
Yeah. I mean, it wouldn't surprise me we don't have to go back that far to see thrusts of that magnitude. If you look back in February, it was trading at 42, and then it only took it 2 or 3 weeks to get into the 60s right there. Yeah. And so, I mean, when it goes, it goes. It's just a matter of when it's going to happen and how much it's going to tease us on the way there. I'm kind of wondering, and I've been wondering this for a while, because I've been kind of soured on the Bitcoin miners, whether or not they're going to fully participate in a major Bitcoin rally. I mean, we've seen like CLSK is one right here. It's up like 5 and some change. It was up 12% yesterday as Bitcoin really started getting going. I wonder if these stocks have kind of lost their sparkle, or if they're going to like really jump up and start to run along with Bitcoin. Here's Mara. That's another one where it seems to be stuck in this range between like 14 and $18. I know it's a pretty wide ranger right there, but you know, I kind of wonder if like these aren't losing their shine. I don't know if you had any opinion about these miners, or if they can.
I do. The new Bitcoin miners are actually Robinhood and Coinbase. Like, I think to play Bitcoin as a stock, Robinhood and Coinbase have replaced the miners, and I think that with the changes, you know, the scheduled changes that's happened with the miners, I think the miners are just not as pure a play. I know from, I'll say this, like when I started my career, I worked for a guy named Martin Sosnoff. Martin is still alive, money manager since 1960, and I got to him in like 1995. And Martin was very intelligent, but he was in his 70s at the time, or maybe in his 60s. Every morning I'd go in, the market would open, he'd be smoking this giant cigar, and we'd be talking about stocks. And what Martin did very, very well, he wasn't that deep. He wasn't like, getting into the details and like going through all that. But Martin had a very keen sense of what the larger money managers were thinking. And understand that big institutional money, they have to operate with heuristics, simple rules to govern complex situations. I will tell you that in Bitcoin right now, the simple rule when it comes to equities is big time money managers are saying, Hood and Coinbase, way to play Bitcoin. It goes up, I'm going to make money. Miners, probably go up, maybe go up, but there's all these other issues around the throughput, the power, all these different things. So it's a muddied story. So I think that Hood's the new miner. Look at it breaking out right now.
Yeah, and we're still over the trade desk. We're still holding half a position here. We took triple digit gains, and we're just gonna let some ride here because after marking some time here, I feel like 30 is not out of reach in the short term. This could totally explode higher. It's definitely caught the tiger by the tail ever since that that big earnings dip and then the subsequent recovery. So I love the chart. I feel like Coinbase needs to do some catching up. It's still knocking on the door here. It's got a little bit of resistance to deal with at the 200-day and at this polarity level near like 197, 200-ish. Yeah, $200 like round number break right there. I think it goes. It's got earnings on the 30th. A lot of Halloween earnings this year. I've noticed the 30th and the 31st. Very spooky, but I like this. I like how this looks, and I'd probably wait to see what earnings are going to be. But I think this is another viable play in the space for sure.
Well, and we're going to be hitting the heart of earnings right now. I was just doing an analysis of all the Mag 7, and by the third and fourth next week and the week after, we're going to have all that earnings out of the way. We're also going to have buybacks coming back. I've got a chart here that I can send you that basically shows the buyback closeout, a dark period. And it really ends on about October 26th, 27th, something like that. Nice. So they start to come back, but I want to take one step back and just also I don't want to say no to caution. I know we're very bulled up. I know we see a lot of opportunity. We want to be aggressive. This is very contextual though. This isn't wanton. This isn't just like, oh, let's just go out and do anything. You need to be tactical. You need to pick your spots. I'm actually watching the chat, and someone said, Kamala's not for Bitcoin. I don't actually think she is for Bitcoin. What I'm saying is both candidates are going to say they're for everything for the near term. And I think that the market, again, it doesn't really matter what they're for in the short term. It matters what they're saying. And, as we look going into the seasonally strong period, they're just kind of saying they're going to be for everything. So, I think you need to balance that. But there's a period. And again, I don't want to, I sent you this note. There's times you should be more aggressive. There's times you should be really cautious. There's times when you shouldn't trade at all. You should just be like, I'm out. I'm not going to do a darn thing. But there's times when you can be more aggressive. And I think this is one of them.
Yeah, definitely. It's certainly starting to feel that way. And, I think that's a really important point you just made, where when you have these windows, I like to say, that open in the market where they're very favorable for this type of trading, you really need to be in the right stocks. You don't want to be in the laggards in this situation because you're blowing your big opportunity to really get ahead of the averages and get ahead of the market. This is when we have to make hay. So we have to be in these stocks that are performing the best right now, or else we just have all that opportunity cost sitting out there and not budging while the rest of the stuff is screaming higher. And I think that's what, you can throw darts, and yes, the stock will probably go up if we have a rising tide, but is it going to be one of the leaders? That's what you need to be asking.
I think that is such a powerful statement. And let's take a step back. In 2022, it was about staying alive. Okay. Like my trading strategy, the one we're going to be introducing here, we made money in 2022. We were up high single digits on all longs. You know, you can churn out some gains in that kind of market, but you're not going to be up 20, 30, 40%. I mean, maybe there's certainly strategies out there, but for the most part, 2022 was about staying alive. 2024, and this kind of market, this is about stretching your legs. You know, it's that year where you make 30 so that you can whatchamacallit, survive the years where you're down and not doing as well. So I think that, you know, again, it's about like optimizing your portfolio. I think that's what I love about what you just said, is if you've got something that's struggling, maybe just ditch it. In this market, it's funny. It's almost more important when the market's like this to get rid of the things that are really underperforming than it is when they're outperforming. Or sorry, when we're in a bad market.
Yeah, and I know it's not easy to do. You kind of are reluctant to be like, well, should I sell that? Because you see a little bit of green on the screen every day. But yeah, absolutely. I would say, you know, this is the time to really be combing through your portfolio and figuring out what's not playing ball. If it's not playing ball, then maybe revisit it in February. You know, when things slow down, and maybe it's a good like longer term play. But right now, free up the capital for, you know, these more aggressive trades. Something we haven't talked about yet. Speaking of aggressive, silver looks like it's firming up for a pretty big move here. I'll pull up the chart. We had a little bit of a dip there, and we've had some dollar strength that you know that shook it a bit at 32. But it feels like, you know, after last week's drop, we're just building right back up again, and a breakout of this 32 area is probably inevitable at some point here. I don't think we're gonna come all the way back down into the mid 20s anytime soon. I think this is gonna go eventually, especially since gold has been so damn strong. No matter what's happening anywhere else, it feels like, you know, we could have a week where the dollar is ripping or something else is happening. Doesn't matter. Gold is still very much up here in the stratosphere, clinging to these right nearby these highs. I think its all-time highs are right back here from late September, right in the 2684-ish range or all-time highs, and we're right there, creeping back up on it. The demand feels insatiable right here for precious metals.
The only thing I'll caution about gold, that chart feels like Novo Nordisk in June to me. Go back to that Novo Nordisk chart and pull it back to the end of June. I didn't realize, so I obviously watched this, but I've been on the road. I pulled up this gold chart and I gasped. I literally was like, oh, holy excuse me, I don't want to curse on here, but like I was like, wow. And I love it. I think it's great. My caution, and this is my style of trading, again, look at Novo Nordisk and look at back at the end of June, and you would have said this thing will never go down again. Yeah. But that makes me like your silver trade even more, because there is no world where gold looks like this and stays like this or moves higher and silver doesn't break out from here. No world. It is an impossibility. Like it is rule of physics in the markets. So, you know, and so where would I be cautious right now in the markets? I mean, maybe this is always my style in the short term. I actually might be a little cautious on gold up here. Yeah. Like, I just feel you're so extended from the 50-day moving average. You've been so extended for so long. The gravity works. And where would I put that? And let's actually take gold and silver. This is a perfect example. Where would I be cautious? I'd be cautious with something like gold. Where would I be aggressive? I'd be aggressive with something like silver, where you've got this nice base, you've got this nice consolidation. And, you know, I wouldn't say someone to do this. You could go short gold and long silver, which is actually a classical trade. You know, there used to be the ratio. What was the ratio that they used to say? Was it 6-1, 8-1?
I don't remember, but I know what you're talking about. Yeah, very tactical to play a silver rip and a gold dip like that.
Yeah. And by the way, I don't hate gold. I think gold moves higher. But I literally, I don't care that this chart says gold. I look at the chart and I say to myself, I wouldn't care that chart said Novo Nordisk. I say to myself, okay, this thing needs to take a break. And when you have this long of a move, this kind of move, this extended for this long, when you take a break, you're not going to take a break for 6 days. You know, it's going to be 6 weeks or longer, in my opinion.
Yeah. No, I hear that. And I think you could put that into context with the market and say that if we really start seeing the averages rip in November, December, then you know, that hotter capital might flow from something like gold into tech or into growth or somewhere else. I think that's entirely possible. I know that might be like, a little squishy, but I think you can put it into that type of context too, where the hot money just sort of flows out of a trade like that and then it rests. I mean, just pure market rotation. Something else about silver that I really like right here is the fact that on that dip that we had last week, the miners really didn't budge very much. I mean, we had a day when silver was down almost 4%. It settled down like 3 and some change, but it was down 4 and some change earlier that day, and silver miners were down maybe 1. So the appetite is certainly there, I think, for those stocks, and they're all setting up really nicely. I think this is a good spot to be in. We're in a silver miner trade in the chat right now, and I like it right here, and I would love it if silver could get nice and tight just below 32 here, and then pop higher, regardless of what happens with gold, going forward in these next few weeks.
And one other thing I'll put in contextually here, because I think that in the next few weeks on this broadcast, we're going to have some awesome trades for you. And why do I think that? Because what I do think is going to happen, I personally, as a trader, I love earnings season. Okay. As an investor, I kind of hated earnings season, right? Because as an investor, you've got things that you want to hold on to the way I invest, like long-term, I'm looking for at least a double, and I prefer a 3 to 5 bagger. And that means you're going to hold on. You have to hold on for a good long while. Okay. There's an old rule that if a stock doubles in 3 months, you should sell some. If a stock doubles in 3 years, you probably should be buying more. But what I think we're going to see happen is you're going to see some stocks stumble. And, we haven't really gotten into earnings. Humana, United Health got hit today. I don't like that one because I think you've got negative earnings revisions. But I think this is going to be a market where you're going to be able to pick off some stocks that have traded, that get hit on earnings. And it's going to be a really nice market to buy those. So I feel like, so let's talk about targets, right? Because I would stay away from very extended RSIs right now. I would look to a type of laggard, not a true laggard. Like I think the Bitcoin miners are laggards, but I would look for things pulling back in an uptrend or things with that nice big consolidation. I think it's going to be very target rich, and I'm excited for earnings season. I think we could have a dozen trades that come out of company reports. They grew 22.3%. Market was expecting 22.6. Stock off 15%. In this tape, you buy the heck out of that. I think it's going to be really, really kind of fun, to be honest, the next 3 weeks.
Yeah, I like that. Do you have any particular tickers that you're watching right now in this? I know you mentioned, I don't know if I should give this away. If you, I don't remember if it was you or somebody else, but weren't you mentioning like CLH Celsius as like a potential target or something like that, or is this one just too?
No, CLH. CELH. That one's just, this is a better buy at 40 than it is at 30. Is what I would say about Celsius. And this is a perfect example of what happens to momentum stocks. But I'm going to answer your question. I don't have a particular stock, and I'm watching CNBC every morning waiting for them. They're coming to me. I'm waiting for the pitch. I'm sitting on the curveball. I don't want to get too sportsy. I'm sitting on the curveball, and I know it's coming. And I'm just going to wait for the market to serve it to me, and then I'm going to hit it out. But I think we're going to get it. And especially right now, we're in the financials part of the market. Once we get into software, technology, consumer, et cetera, I think you're going to see some really, really good opportunities.
Yeah, definitely. Any last words? I think we've had some sound issues today. I don't think we have too many other tickers to go through from chat. Do you see anything we need to go through chat before we wrap it up?
Yeah, I mean, I'll just answer a couple of questions because I see where people are coming from. I think gold's great. What do I know about gold that the central banks don't? The central banks are buying for 2 years, 5 years, 10 years. Right now, we're talking about trades for 2 weeks, 5 weeks, 10 weeks. What I'm telling you is that I think gold can go down in 2 weeks, 5 weeks, 10 weeks, maybe even I don't know, about 10 months. So that's the difference. It's just about perspective and time frame. Here on top trades, what we're looking to do is make you very nice returns. On options, it could be 50, 100, 200, 300%. On stocks, it's 10, 20, 30. In high probability bets, in a relatively short time frame, 30, 60, 90 days. That's the goal of trading as opposed to investing. And so that's the perspective when something I will go short something we don't do short selling here, but I will avoid something that I absolutely love if it's trading at an RSI of 90, even if I think it's going to double, because you can say as much as you want that you're going to own it, for that time, but it's very hard when you buy a stock and then it goes down 25, 30% in your face to like stick with it, even if you believe the thesis. So we like to combine the two, in the long term. But that's really, it's just about perspective and how we, how we look at it.
Yeah, that's really good stuff. All right, guys. Well, I apologize for the sound issues today. We tried everything to get this connection up and running. I don't think it's on our end. I think it's either on YouTube or Zoom or something. So we're going to wrap it up here and leave it at that. That was some great insight today. Enrique, I'm glad you're back. I'm glad you are rested and refreshed from vacation and ready to dive into earnings season here. I think we're going to have, like Enrique said, a ton of interesting charts and trades to share with you guys over the next few weeks. It's go time. It's time to get in that zone right there. Melt up season. I'm excited about it. Be sure to tune in next week. We should have everything fixed by then, so this is easier to watch. And think about some good questions and pickers to throw our way, and we'll come back at you then.
And I'm going to say, y'all, like, tell a friend. They should be watching these next 2-3 weeks. We're going to make you a lot of money. The ideas are going to be there. Like, I've been doing this for 25 years, and I've seen this setup before, and yeah, I'm excited.
Awesome. All right. Talk to you guys next week. Thanks, Enrique.
Thanks, everyone.